We're here with Danny Moses, managing member of Moses Ventures. Danny, thanks so much for being here. You obviously have a tremendous history in the markets and investing. You were part of the Big Short. What interested you about cannabis as opposed to any other emerging market?
Well, I think people know that when I look at something, I try to find something negative first and then work my way backwards to find something positive. And other than the fact that cannabis is not legal in various forms, I think having the economic tailwinds, obviously what it can mean to local communities tax-wise, political tailwinds, 90-something% approved medical, now it's up to almost 70 approved rec, I'm sure, at this point. And then just the wellness aspect of it, which is now going to, I think, move cannabis even farther forward. I just think it has all the ingredients, no pun intended, for a great investment, and you just got to know where to put your money in various investment funds.
So as far as knowing where to put your money, what types of companies or what characteristics do they have to have for you to be interested?
So I think there's a lot of different pockets. I think within the ancillary, when I say ancillary, you don't have to touch the plant per se to invest in the space. I think technology is really interesting. I think figuring out the financial payments are really interesting. Packaging, compliance software. So a lot of my money is invested in Merida Capital, which is investing in public and private, but mostly private companies. And so I get a kind of look into the space that way. And so I find myself investing alongside Merida in certain aspects or on my own outside. So there's not an area that I won't look at. And I think branding is now the most interesting that's come along quickly here. And that's really because of hemp being approved during the Farm Bill. And I think first mover advantage in this market is going to be huge. So getting the shelf space, being the vitamin water of this space. So it runs the gamut on everything that I would look at. So
you've spoken a lot here at this conference about cost of capital and how high that is. Explain that issue and how it can sort of work itself out.
Sure. For a long period of time, still to this day, investors are driving the boat in terms of what they want as far as terms. That may be equity capital that's up near 20% cost when you include warrants that may be issued in terms of dilutive shares that could be outstanding after the warrants were exercised. And in the debt markets, there is no debt market. So a lot of that is private hard money lending. And hard money lending is occurring obviously high teens, 20, 25% in some cases. So I think whether it's the States Act or something that occurs over the next, hopefully, couple months or couple quarters, it will lower the cost of capital for these companies, because if you're able to issue a traditional, it'll be a high yield bond, right? It'll deem to be risky, but if you can actually pledge your land and collateral and buildings as assets, you'll be able to lever up your balance sheet, so to speak, issue less equity, less diluted to shareholders, and recap these companies, so to speak. So I think the multi-state operators, people that own property, people that are going to be best in line to benefit from that.
Danny Moses, thank you so much.
You got it, thank you.
All right.